Welcome back to another talking point. Now, when I say SARS, it usually strikes some kind of emotion, whether it be a cold shiver or an eye roll. Everybody has some sort of reaction to it. But most of the time, it's because SARS is being seen as the company that takes our money with little to no benefit. Well, in today's talking point, we're going to be looking into the fact that SARS is now putting a lot more focus on trusts. And as you may know from following us for a while, the Wealth Masters Club, we place a lot of focus on using trust as our investment method. Now, as a number of trusts in South Africa has grown significantly in recent years, SARS has increased its scrutiny of trust administration to ensure that there is compliance with all of the tax laws. So in this video, we're going to explore the reasons behind the increased focus on trust and what it means for those who have trust. So whether you're a trustee or a beneficiary, this video will provide you some essential information you need to know about SARS and their efforts in ensuring that trusts are correctly administered. So joining me today is Anneline Lamond from Destinata Accounting. Annie, thank you so much for spending the time with us.
Hi, Damien. It's nice to be here again.
Now, Annie, for those who may not know, how and why is SARS getting involved in trusts?
So SARS was always involved. It's just now they are really zooming into trust because of the amount of non-compliance. People are not taking their trust as serious as the personal income tax. And therefore SARS is now really zooming in to trust.
And then when did SARS begin looking into trust a little bit more? And do you know what the sort of reason was for that?
They really began to focus on trust compliance in September last year. And as we know, not everyone takes it serious, as mentioned before. So I think that is the reason why they are zooming in, because people are doing distributions in the trust and not declaring it in their personal income tax. And that seems to become a problem because the two submissions are not in sync with each other.
So I think, Annie, what you're saying here is very important to make sure that a trust is sort of legally safe and sound. So do you have a couple of points here in terms of what can be done to ensure that they are being administered in the correct way?
Okay, so trust must have a bank account. It must be registered for income tax. Annual financial statements must be completed as well as your annual submission to SARS. This is important because should distributions take place, you can make sure that that distribution is declared in your personal income tax at year end.
And in your article, you mentioned that SARS in particular is looking at capital gains tax within a trust. Now, is there a way that you can deal with this in a certain manner?
So if there's capital gains tax in a trust, that tax liability can be moved to a beneficiary.
Right. So Annie, you've given us a nice little tidbit there, but can you give us a little bit more information about, how we would go about doing this?
So we distribute taxes by making use of the conduit principle.
Can you give us a little bit more information about what the conduit principle is and how that works?
It's a pipeline where taxes are being transferred from the trust into the beneficiary's name. The beneficiary has to then declare it.
Annie, now, obviously, we've got a lot of people listening to this who might be interested to find a little bit more information. How can they go about getting more information from the team at Destinata Accounting?
They can email services at wealthmasters.com and Wealthmasters will put them in contact with a correct accountant at Destinata.
Fantastic. Annie, thank you so much. And in case you do want to get a little bit more information about how we do things and what we do and why we do it, we have amazing free online training for anyone who wants to learn about the hows and whys of using trust effectively for asset protection or investment purposes. This training is developed to help you understand the key concepts and strategies around using those trusts to safeguard your assets and maximize your returns. We obviously focus a lot on property investments, and we'll show you in that video why we suggest using trusts for your property investments. But that's it. Thank you so much for joining this video. If you enjoyed it, please remember to like and subscribe, share any questions you might have in the discussion below, and we will get back to you as soon as possible. And also don't miss out on our incredible opportunity to expand your knowledge and expertise in the field of financial planning and investment in property. And those links are in the description below. Thank you so much for joining us today. We'll chat soon. Bye-bye.